G'day everyone, welcome back to Pete's Investing, July 14, 2023. This is the Euro US dollar currency update. On our weekly, we're in a bullish mode, likewise on the daily. However, we've got a bearish divergence on the hourly, so just be mindful of that. Now we're also going to change the parameters, what we did compared to what we did last time, and I'll explain that in a minute. First off, on the weekly, our oscillator is broken above the zero line and it's still showing a bullish movement. So we've got a nice bullish candle overnight, and that's still heading north, which is a positive if you're going long at the Euro US. On the daily, we did have a resistance up here at 11076. Now we're going to move that to this recent high and see how that goes in terms of will it bounce from there. Now you'll notice it's also coincidentally hitting this diagonal ascending trend line. Now I'll leave these trend lines in there. If I zoom out, you can get a bit messy sometimes, but I deliberately leave them in there because it means something. You can see there it's bouncing off those bottoms, and it may well possibly bounce below that trend line and bounce to the downside again, which coincides with this resistance. So again, we'll just leave it in there. We did project this bearish divergence in our previous video now, and we drew this Fibonacci and all this setup with a entry level and target and everything else. Now you'll notice if I blow up, you'll notice since then we've got a new high on the CCI. What that means is it invalidates the divergence, so that's no longer valid. And I'm sorry, let's go back a step. That divergence was there. I'm ahead of myself. That divergence was there, and it actually worked. You can see there with that Fibonacci range, it hit our 23% level at that level there. So that worked. What I was going to say was, since then, I thought it might have extended further to this point over here, which would have possibly coincided with that area on probably that candle there. But you can see there it's gone higher than that point, so that divergence is no longer valid to where we are today. But it did work back here when it hit our target. So there we are with that one. Bit of confusion. Okay, so back to where we are. On the hourly, again, this is where we drew it last time, where it stopped on our last video. And that was a divergence based on that downtrend on the CCI versus an uptrend there on the price. And that's at the end of the last video. Now notice the CCI is continuing to the downside. So what we're going to do is extend that out to the latest point there. So it's still a bearish divergence on the CCI, and I won't draw that. You can see there that has gone high. So I'm going to delete that Fibonacci up to that point there. You can see there's a new divergence now. That's, if I delete that, and I draw another line from that level there up to there. So bearish divergence on the CCI versus the price. So if it bounces and if it pulls back from that resistance area and it breaks below this channel, then that's going to be our entry point, in which case we're going to set a new target. So I'll pick that recent low for a Fibonacci range. So what we'll do is if it breaks sometime, let's say it starts turning down here and it breaks somewhere down there, our new target area is going to be that 38% level. Okay, so if it breaks down below there, that'll be our target. So we'll keep an eye on it and see how it goes, but that'll be our initial target. So as long as the CCI remains below that point there. Okay. So that's where we are. Again, the weekly and the daily are in a bullish momentum, but we may have hit a key resistance and we may see a bit of a downturn based on the hourly divergence. So to understand how to trade this and other trading strategies, subscribe to my Patreon page. Feel free to make a donation there. We also scan weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.